The Canadian Securities Exchange presents your go-to source for trends in junior and small cap markets. Each month, join host Anna Serin and financial expert Bruce Campbell in partnership with Stockhouse.
Welcome to episode 4 of The Market This Month. You're joining us in May of 2025. In the 2025 Canadian federal election held on April 28th, Mark Carney's Liberal Party secured a fourth consecutive term, forming a minority government with 169 seats, just 3 seats short of a majority. The Conservatives, led by Pierre Poilievre, won 145 seats. Carney, a former central banker, also won his seat in Nepean, Ottawa. The Liberals' victory was attributed in part to public concern over U.S. President Donald Trump's aggressive trade policies and annexation rhetoric, which contrasted with Carney's emphasis on Canadian sovereignty and economic stability. Following the election, Carney met with President Trump in a tense Oval Office meeting where he firmly rejected Trump's suggestion of Canada becoming the 51st U.S. state, stating, "Canada is not for sale." The meeting highlighted ongoing tensions over trade and national sovereignty, with both leaders acknowledging the importance of continued dialogue despite their differences. Carney faces pressure to renegotiate a trade deal that supports jobs, especially in auto and resources, 2 sectors hit hard by U.S. tariffs. Meanwhile, his energy platform emphasizes clean energy expansion, streamlined project approvals, and reduced reliance on the U.S., though analysts caution that meaningful impact could take years to materialize. Turning to our markets, we now try to assess, is this a bull market, bear market, or something in between? After the pullback from February highs to April lows, we're seeing signs of consolidation. But there's a technical signal flashing that has market watchers buzzing: the breadth thrust indicator. We'll also dig into the safe haven debate, gold versus Bitcoin. Both assets are hovering near record highs, but which is better equipped for inflation, recession, or geopolitical tensions? Gold remains the traditional go-to, while Bitcoin continues to push boundaries with institutional interest and digital native adoption. As uncertainty looms, choosing your hedge wisely matters more than ever. As we navigate this evolving landscape, post-election shifts, global policy pressures, and volatile sentiment across sectors, one thing is clear: understanding market signals, sector exposure, and long-term trends is more important than ever. Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here for episode 4 of The Market This Month. I'm joined by none other than Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Oh, it's awesome to be back. Right?
It is great to have you back here in Vancouver, and we've had a fantastic spring so far in weather. Anyways.
Yeah, for sure we have.
Yes, absolutely.
Yeah.
Okay, we have lots that we're going to unpack today. We are speaking in May of 2025. This is episode 4 of The Market This Month. And we are in a post-election world, not post-apocalyptic, but post-election. So let's talk about, we obviously in the intro, we talked about what happened, the election results. Hopefully all Canadian citizens know the election results, but do you have any commentary there on how now with the Liberal Party being in power again, any thoughts on how this could impact the market?
Yeah, I mean, I guess the concern or part of the concern was what would happen and how that might impact investment markets. And we really didn't see much impact at all, right? So Canadian dollar was still fairly stable. Canadian markets were still fairly stable. Canadian bond rates were still fairly stable. So from that perspective, it really just kind of came and went, and it didn't really have a large impact on investing immediately.
Right.
And now, this is where things are going to change going forward. What happens with the productivity, what happens with, some of the unlocking of resources, and, how will this all transpire over the next few years?
Right. Now, maybe another way of looking at it is that the rubber needs to hit the road now. So there's been a dialogue. I feel like we've been in this election mode for much longer than we were actually in it, because we knew that Trudeau was going to be stepping down. We knew that Carney was going to be stepping in. And then we knew this election would happen. So we've been in this mode for a while. Do you think maybe the markets didn't react as much as we thought that they might because there's a little bit of investor exhaustion, that reacting to it might be more than they're able to do anymore?
I mean, it could be exhaustion, not from the election and what's happened, but just overall market exhaustion, right? There's been so much dynamic around the news flow and how that impacts markets.
Yeah.
But the other thing that could have played into this is that, while there's lots of polls and they flip back and forth, from when Trudeau originally stepped down and the Conservatives had a big lead to, coming up to election day, it became apparent that they had lost that lead and that the Liberals were there. So it wasn't a surprise. I think markets, usually can price in an outcome, but when they're surprised, that's where you tend to see that moves down.
Gotcha. That makes sense. Well, some of the things that he has talked about implementing, I think will take a little bit of time for us to see how that's going to play out as far as some things that might come down and hit the market. So we'll pay attention to that. Okay. Are we in a bull market or a bear market, Bruce?
Yeah, we're unfortunately right in kind of the no man's land right now. So, there's lots of traditional kind of metrics that, are simple and people like to use. So the 200-day moving average, if the market's above the 200-day moving average or below the 200-day moving average.
Right.
In Canada, we are above that. I mean, by no means does that define a bull market or a bear market.
Yeah.
But that certainly is positive, or at least not negative. In the US, we dropped way down and we came up to that level. We've just been sort of like gravitating towards that for the last few weeks. But what we have seen that, makes investors a little bit concerned and nervous is what the leadership is. And so we saw this leadership of, technology prior to the market starting to correct. And now we've seen that rotate. So it's consumer staples, utilities, financials is a good sign. That's been positive. But typically when we see those staples and utilities leading, that's usually, investors are concerned. So we almost have a bit of a barbell. And so we're kind of in this no man chop land.
Are we in market purgatory or?
Perhaps. We've come through earnings and, we've come through the majority of earnings. And by the time this is broadcast, we'll be finished with earnings. And they have been, for the most part, fairly good. I mean, obviously the one concern is tariffs and what impact those will have. And we still won't know that for a while. So it's hard to actually say whether or not we are in a new bull market and we just saw this correction happen, or if we're, going to consolidate and go sideways, and only time is going to tell us that.
Right. So we're not exactly sure where we're at. Hopefully it's a bull market. That's my hope for all of us. Okay, let's talk about, this is a technical signal that you pay attention to. The the breadth thrust indicator.
Yep.
Right? Okay, I'm going to talk, I'm just going to give a little background on what this is. But the breadth thrust indicator is rarely triggered technical measure of market momentum. It was developed by a fund manager, Martin Zweig. The breadth thrust occurs when the 10-day moving average of advancing stocks versus total stocks on an exchange moves from below 40% to above 61.5 within 10 trading days. It's considered an extremely bullish sign, and for good reason. Since its inception of the S&P 500 in 1957, this signal has only occurred 16 times and has been 100% accurate every time it's identified the start of a new bull market. So what are we seeing with this indicator?
Well, we've seen it trigger. So it met the criteria that we needed for it to happen. And now, and this happens, there's been a few of these that I've experienced over my career. And then the same thing happens every time. People always throw a little bit of cold water on, well, why it's not going to work this time, or why this time it's different.
Yeah.
And we know that those are, sort of the most dangerous words in investing. This time it's different. But what we know is that it has actually triggered. There was some interesting stats that I've done, because Marty Zwag went back and only looked at it, as you mentioned, from like 1957. There's been some other people who have calculated and taken it all the way back to the 1900s. And they actually found that it doesn't work 100% of the time.
Okay.
And when it doesn't is because we're heading into a recession or a depression. And so that was in the, 29 through, sort of 40 period.
Okay.
And that's the only thing that we don't know is if whether or not that's where we're headed. Most people say that's not the case. We might have a recession, but we're not going to have a depression.
Okay.
And so what we're looking at right now is that, okay, we've got this positive signal. It's indicated, with 100% accuracy. Doesn't necessarily mean it has to happen, but when we combine it with other things, it's good to know kind of in the back of our minds that, okay, we've had this signal. If things continue to improve, then we probably are on the launch pad for something really strong.
Okay. Well, it seems like there's a few indicators out there right now that are telling us that there is a possibility that we could see a bit of a market, right?
Yeah, I mean, the market's V-bottomed so far. It hasn't retested that. It's regained, 50% of its drop from high to low. It's regained that. It's not quite at that 200-day moving average. What we want to see, though, is we want to see investors' appetite for stocks move more towards, the higher growthier type of companies as opposed to the defensive staples utilities type of names. And we can actually see a barbell. We've seen that before. So, 2019 was an example of that, where technology led and utilities led, which was an interesting year. Maybe we see that again, but we need that leadership. So far, it looks like financials are starting to come. It'd be nice to see if we saw something else, maybe industrials or, mining or even technology.
Okay. And on that note, I mean, the one elephant in the room that we haven't brought up in episode 4 is tariffs.
Yeah.
Do you feel, it feels to me like it's starting to settle down a bit, the yo-yo back and forth. I mean, look, tariffs are still going to be a part of our life for the foreseeable future. It seems like that is what's happening. But the back and forth seems to be slowing down. Is that helping things settle a little?
Yeah. So if you, like you say, the back and forth, if you take those, those little marbles that are on the strings and they hit each other and they go back and forth, well, the energy is now starting to wear that it's like smaller, as it comes to a stop. I don't think that now that, they've proposed tariffs, that tariffs are gone. I don't think they're out of the, going to go back to no tariffs, but they will probably get scaled back significantly. And as a result, the market's been able to recognize that and starting to be able to price that in. The surprises are really what caused the big movement up and down. Mm-hmm. And it seems like that's started to fade. Okay.
Well, that's good for now. And I guess we'll find out in the coming quarters how that's affecting, the bottom line for the companies that we're investing in, right?
Well, the one big thing that, has had a fairly negative impact is consumer sentiment.
Okay.
And that's just because of kind of the uneasiness of, well, what's happening with those tariffs? But interestingly enough, there's been lots of studies done on consumer sentiment. And when consumer sentiment's high, markets don't tend to do well over the next sort of 12 or 24 months.
Right.
And when consumer sentiment is low, they do tend to do fairly well because it's all washed out.
Right.
And of course, every time is unique, but human emotion tends to be fairly similar. So we've just seen a very low reading for consumer sentiment. So it'll be interesting what happens going forward. And it's just one more piece to kind of add to all the others when we kind of look at all of the feedback and all of the data together.
Well, I think too, when you talk about investor sentiment, even for me personally, when the markets are good, I don't examine my portfolio as closely as when they're bad.
Yeah.
So maybe just the human nature component is that when there is a lot of the pendulum swinging or uncertainty in the markets, we might as investors pay more attention.
Yeah.
Maybe we become more active investors and maybe that leads to better markets. Perhaps.
Yeah.
Okay, let's talk about gold and the US dollar. Obviously, the two are having a moment. Tell us what's happening.
Yeah, so, we've talked a lot about gold and gold's, bumping up against new highs right now.
Yeah.
But one of the things that's quite interesting is where you see correlations go. So where one instrument moves compared to the other one. And right now, the US dollar and gold have been moving in almost perfect opposite direction. So if the US dollar goes up, gold goes down, and if the US dollar goes down, gold goes up.
Right.
That has historically been
A relationship.
a fairly steady relationship, but right now, especially in the last kind of 90 days, it's really tight. So it's, about a negative 0.95 correlation. So one moves, the other one moves.
Right.
And we didn't really see that as much when gold was moving up throughout the last, kind of 18 months.
Yep.
We saw that, and there was periods of the US dollar moving up and gold moving up at the same time. Maybe not like on a daily basis, but if you looked at it over kind of like a weekly and monthly basis.
Right.
So something to watch, because the dollar and gold are really moving together or opposite of one another.
Right. Right. Interesting. So I guess my next question to that is, how has Bitcoin got a relationship to this all?
Yeah. So, I mean, lots of people, kind of refer to Bitcoin as like the new gold, or, a different store of value.
Yeah.
I don't think it's quite the same. I think of gold as a currency, and you clearly see it's acting like a currency,
Right.
with the US dollar the way it's been. But Bitcoin's also hitting, new highs, which is, again, when you look at the weight of evidence, when we talk about breadth thrust, we talk about, bull market, bear market, and now you're seeing a risk investment that's Bitcoin hitting and getting closer to, its all-time highs. You really have to sort of pay attention to that.
Yeah, absolutely. And I think Bitcoin too, I mean, Bitcoin's been, it's been around long enough now that you've got to imagine that it is going to start naturally getting treated as a fiat, right? I mean, there's a generation that might only know that as being a currency that we use in society. And do you think that that'll continue to add value and weight to it?
Potentially does. I mean, the one thing that we have seen is that it's becoming more institutionalized.
Right.
Right. In that, 10 years ago, if a portfolio manager decided they wanted to own Bitcoin for their portfolio, it was extremely difficult. And they had to go out and get a wallet. And then even then, the custody of that Bitcoin was kind of in question because their regular custodians wouldn't hold it. Well, now there's multiple ETFs of multiple cryptocurrencies,
Yeah.
and you can just go out and buy it. And if 5 minutes later you decide you want to sell it, you can turn around
That's right.
and sell it. And so that's one thing that has really changed, and that will continue to, I think, move in a direction where institutions include Bitcoin or other cryptocurrencies in their portfolio going forward.
Flow of capital doesn't like resistance. It
No.
likes to be able to find it there easily. Okay, let's talk about on a sector level.
Yeah.
There's obviously some industries that that were leading the way that are no longer leading the way. New sectors coming in. Tell us what you're seeing there.
Yeah. So anytime we go through that correction, typically the sector that led you in doesn't lead you out.
Right.
And that's what we're seeing, right? I mean, technology has been really the strong leader for probably 18 months.
Yeah.
There was a lot of talk around AI. There was a lot of interest around AI. I don't think that's gone away. But now valuations are starting to come into perspective, and
Which makes sense.
Yeah, we've seen this kind of growth value shift to a certain degree. And now we're starting to see some of those other sectors that are leading. So, financials were up there, but, now they're really starting to accelerate. So that's a good sign. We haven't really seen anything from, I shouldn't say anything, but, energy hasn't really been doing a lot. Granted, the price of oil hasn't been that high, but that would be a sector that we probably want to watch to see what happens with it, because historically, as the economy globally is accelerating, you start to see energy, doing better just because more demand and less, or kind of limited supply is starts to push it up. I mean, we are seeing a lot of economies around the world that were accelerating prior to the tariffs. Whether or not they continue to, that's, I think, what the market's really kind of nervous about.
Yeah. Okay. Well, we'll watch that for sure. Okay, we're gonna get into my favorite part of the show, Bruce. We're gonna talk about CSE listed issuer news. We have some neat stuff that happened in the past month. So we have a newly listed company that's just joined us in early May, McFarlane Lake Mining Limited. They came over to the CSE from Cboe Canada. The company is advancing a portfolio of gold exploration projects, including past producing McMillan and Mongowin properties near Sudbury, West Hawk Lake, and High Lake near Ontario-Manitoba border. And the Michaud Monroe property along the Golden Highway east of Timmins. CEO Mark Trevisiel, I hope I said that right, Mark, said the move to the CSE, with home to over 350 mining companies or mining and exploration issuers, aligns with their growth and strategy and increases investor visibility. So we're very excited to have them. We love seeing these local Canadian projects, and definitely they have a great team behind them. So welcome, McFarlane. Thank you for joining the CSE and the family. Beyond Oil, I wanted to mention I thought this was interesting, Bruce. So they've been with us for a little while. They're a food tech innovator focused on reducing health risks from fried foods and improving sustainability in commercial kitchens. They recently exercised $4.5 million in warrants. So they actually joined us 2 years ago at the inaugural Summit on Responsible Investment and spoke on stage. They've been with us a few years. It's quite neat to see what they're doing. What I thought was kind of neat in these markets was to see an issuer exercise warrants, and not only exercise warrants, but that amount of capital. What are your thoughts on that?
Yeah, I mean, that stock has been doing really well. The company's been executing. They just keep getting more deals. And so they have these warrants that are
in the money,
really in the money. And so clients or investors have decided that they're going to exercise those, and it's great because it's cash back to the company.
Exactly.
And at the same time, it's it's a return for the investors as well.
I mean, look, this is the whole point of what warrants are supposed to be.
Yeah.
Okay, so sweeteners and warrants and such things, they're meant to provide some value of investing directly in the company and taking some additional risk, maybe if it's earlier stage. And the goal is that the warrants end up in the money. The thing that is so wonderful is when you see warrants exercise is that the money goes back into the company. So there's a resurgent back in. It's not just trading on the secondary market. But I also love that it makes your existing shareholders bigger shareholders in the company and coming back in, at a second round, essentially. So good for them. They've obviously done a really great job to have that much support in the markets. I also want to mention Draganfly. They're a drone technology firm. They just raised $3.6 million US under their NASDAQ listing. And so I thought, first of all, this was interesting because we're starting to see more and more drone companies coming to the market, which I thought was interesting. That technology really is starting to get implemented, I think, in many different ways. We have some other companies coming to us that have some neat drone technology. But also I wanted to ask you, they are raising money in the US. And I was curious with what's been going on in our political framework that we live in now. And I know that some of our issuers wonder, how do US investors feel about investing in Canadian securities right now? So what are your thoughts on that? Do you have any?
Definitely a vote of confidence, right? I mean, the fact that these US investors stepped in and invested, and they also did in US dollars.
Yep.
Which is great to see as well.
Yeah, absolutely. Well, congratulations to Draganfly. And then finally, just wanted to mention King Global Ventures. They closed an oversubscribed private placement of $5.51 million. The proceeds will fund ongoing exploration and drilling at their Black Canyon project in Arizona, which includes 213 contiguous concessions and 15 former operating mines within that asset, including past producing Howard Copper Mine. The company is focused on precious and base metals exploration across North America. It's just, we continue to see month by month these nice little exploration capital raises. So, I know the markets have been tough in kind of the junior and growth side, but we are seeing these nice little chunks getting raised. What are your thoughts on that? Is this specialized money? Is this, where is this coming from?
Well, the taps haven't been fully turned on.
Okay.
But like in a case like this, where they have old past mines that became uneconomic at some point in time because of what it costs to mine and the metal prices.
Right.
And now you've seen the metal prices rising, so it becomes economic again.
Turn those lights back on.
Yeah, this is kind of the story of, the last couple of years. Not so much the pure exploration, like we're going to dig a hole and try to find something. It's like, hey, we know there's something there.
Right.
And we just want to like restart it and then get it producing cash flow, but it's going to take us a little bit of money to get there. And then we have the cash.
Right, right. That's amazing. Well, congratulations to all of those CSE issuers on doing so well. Okay, Bruce, before we can talk again in a month from now, what should we be thinking about in the market?
Well, lots to watch, right?
Okay.
I mean, we've talked a little bit about, the bigger picture markets.
Yeah.
As far as, are we in a bull or a bear? And, hopefully we get some sort of clarity on what that direction is. And with that, part and parcel comes what sectors are going to be leading and, where the opportunities lie, for the next 6, 12, 24 months.
Okay. All right. Well, I look forward to chatting with you again in a month. Thank you all for joining us as episode 4 of The Market This Month. We will be back in June for episode 5. We have the Summit on Responsible Investment coming up. We will be in your hometown of Kelowna. For anyone locally, please come and join us. All of the information can be found on our website. We will be releasing content all summer long, highlighting our issuers that are in the space. So stay tuned. If you go to our YouTube page, feel free to hit subscribe, and we'll let you know when new content comes to our CSE TV. Thank you again for joining us, Bruce, and look forward to chatting next month.
Yeah, exactly.